Good evening, this is Semantics Research with the Daily Report for May 27, 2022. Today, before the markets opened, we had St. Louis Fed President James Bullard speak about the Fed's strategies to tackle the issue of inflation. One of his major points was that although the inflation levels today resemble those of the late 70s to early 80s, the economy and global financial system is quite different now than it was back then. They have learned a lot from then and have established global regulations for banks to ensure we do not face the same issues again. He said that central banks today use forward guidance, which means that the market interest rates move in advance of tangible Fed action. We have seen that this year with the Treasury yields rising, especially short-term yields, causing flattening and inverting in some maturities of bond yields. As we have stated in earlier reports, the market is doing the heavy lifting for the Fed so far, as the Fed has been noticeably light on interest rate hikes. Bullard said that we have had interest rates move above pre-pandemic benchmarks, which he sees as encouraging for a soft landing. We had an increase in consumer spending in April, led by motor vehicles and parts, and food services and accommodations. The increase in spending on motor vehicles and parts was partly offset by a decrease in gasoline. This is a good sign as consumer spending is a major part of the GDP. Going into today, looks like we had a relief rally for the market this week, perhaps an expiration unwind. A slow grind up this week. Looks like we have a weak bid but no sellers in the building. We have heavy stacks on the offer side, but since we have had a weak bid, no one is eating through those. Personal income increased $89 billion in April, according to estimates released today by the Bureau of Economic Analysis. Disposable personal income, or DPI, increased by $48.3 billion, and personal consumption expenditures, PCE, increased $152.3 billion. Real DPI increased less than 0.1% in April, and real PCE increased 0.7%. Goods increased 1%, and services increased 0.5%, and the PCE price index increased 0.2%. Excluding food and energy, the PCE price index increased 0.3%. The increase in personal income in April primarily reflected an increase in compensation and personal income receipts on assets that were partly offset by a decrease in proprietors' income. Within compensation, the increase reflected increases in both private and government wages and salaries. The increase in personal income receipts on assets was led by personal dividend income. The decrease in proprietors' income was led by non-farm income. The $152.3 billion increase in current dollar PCE in April reflected an increase of $48.6 billion in spending for goods and a $103.7 billion increase in spending for services. The final May reading for the Index of Consumer Sentiment confirmed the early month decline in consumer sentiment, which fell 10.4% below April and reverted to the same level of sentiment seen in March. This recent drop was driven by continued negative views on current buying conditions for houses and durables, as well as consumers' outlook for the economy, primarily due to concerns over inflation. At the same time, consumers expressed less pessimism over prospects for their personal finances than over future business conditions. Less than 1/4 of consumers expected to be worse off financially a year from now. Looking into the long term, most consumers expected their financial situation to improve over the next 5 years. This share is unchanged during 2022. A stable outlook for personal finances may currently support consumer spending. Still, persistently negative views of the economy may come to dominate personal factors, including influencing consumer behavior in the future. As we can see from the commitments of traders report, we have non-commercial speculative traders going long on the market, while institutions were net short. Also, we moved up over 5% over the past 5 days, which is about 3 standard deviations. So we are due for a pullback since the Fed is very hawkish and the macro situation is bad. We had the junior traders holding down the desk for the senior traders who are partying in Montauk. We had retail buying up on low volume and low liquidity on a bunch of high-risk equities, with some quality stocks up as well. Thank you for listening to our Friday report on May 27, 2022. Be sure to check out our description for links to our Substack and Twitter.